Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. I'm going to check out a couple of growth and income stocks now with Todd Bunton, our growth and income stock strategist at Zacks.com. Becton, Dickinson Company is one that you've written about recently. Ticker symbol BDX. This is a healthcare company that's been around forever.
Yeah, they have, and it's they manufacture and sell all types of medical supplies, devices, lab equipment, stuff like that. A very wide margin, profitable business, but also it's in a defensive industry, the healthcare industry, but also has a growth component too. Oh. So for investors that are a little leery of where the market might be heading, this could be a good addition for them because you're still getting some defense without sacrificing growth. And in fact, management actually raised guidance for 2011 after the company delivered a solid second quarter. Analysts have been raising estimates as well. Based on consensus estimates, analysts project 15% EPS growth in 2011, 11% growth in 2012, so you're getting solid growth there. And you're also getting a good dividend. The company steadily raised its dividend over the last 10 years, about an average annual rate of 15%. They currently yield about 1.9%. But their payout ratio, which is the percentage of dividends that they pay out based on their net income, it's relatively low, 31%. So as long as earnings continue to grow, expect the company to continue raising their dividend. And the valuation picture here looks pretty reasonable. They traded about 15 times forward earnings, discount to the industry average of 20 times.
All right. Watsco, WSO, ticker symbol, it's another company that you've written about in the growth and income category. They distribute air conditioning and heating equipment.
That's right. So an HVAC company, all based in the U.S., and people might be leery because housing starts are at a record low. People might say, how is this company growing? Well, in fact, they're growing very solid. The CEO expects record performance in 2011, and that's due in large part to continued acceptance of the higher efficiency HVAC systems in both the residential and commercial markets. So people may not be buying new homes, building new homes, but they're upgrading their current systems, and that's really driving the top and bottom line for the company. Based on consensus estimates, analysts expect 29% EPS growth in 2011 and 24% growth in 2012, and those estimates have been rising over the last several months. And the company has also been aggressively raising its dividend. In fact, since 2000, they've raised it at more than 36% a year. So that essentially doubles every 2 years. Now, they currently yield about 3.6%, but their payout ratio is a little bit higher at 81%. So I wouldn't expect the dividend to double every year going forward like it has, but they should still be able to raise it nicely as long as earnings per share keep growing. And the shares have actually pulled back quite a bit over the last month or so with the overall market pullback. But I would say it presents a good buying opportunity here. The company trades at about 19 times forward earnings. That's in line with the industry average, but its PEG ratio is 1.0 based on the 5-year expected growth rate.
All right. Do you own either of these two?
I do not.
Check out more stocks that Todd has written about in the growth and income category and other stock pick ideas on our homepage, Zacks.com. Upper right-hand corner, we put 4 new ones up there for you daily, one in each of those investing categories that you see listed there. With Todd Bunton, I'm Terry Ruffalo.